edition of Your Business Nigeria. Now, these are the stories we are tracking for you at this time. Minister of Agriculture and Food Security says federal government's ongoing reforms designed to crash food prices. Nigeria Railway Corporation says Warri-Itakpe corridor safe and operational. Stocks dollar climbs as investors hope for United States and China's trade talks progress. Well, let's run through global markets and, of course, our commodities market before we get to our very interesting conversations that we've lined up for you today, as always. First is gold, silver, copper, and platinum. Well, gold has been, there's been this back and forth with the price of gold in recent times. Today it's trading at $3,349.50. Silver is $36.71. Copper is $488.80. And platinum is $1,213.20. Let's look at the percentage points here. Down 0.16%. Silver is down 0.23%. Copper is also down 0.75%, and platinum is down 0.58%. I think this ongoing talks by President Donald Trump and China is, of course, impacting all commodities in the market. It's hitting hard also on stock markets. So it's not too strange to see this flip-flop that we've seen in this market. Let's see if it's same for commodities prices today. It's also in the red. Corn is $431.25. Wheat is $536. That's per metric ton of this food stuff. Cocoa is $9,433 for a metric ton of cocoa. And you know what that means? Real money for cocoa producers, even here in Nigeria. Cotton is $68.12, and it's down 0.34% in percentage points. For cocoa, it is 0.24% down and 1.11% for wheat negative. Also, corn is 0.63% in the negative. Well, let's see what happened to prices markets, where it climbed higher as investors awaited the outcome of the same meeting, the U.S. and China talks, that could pave way for the easing of trade tensions while improving fuel demands. But United States West Texas Intermediate crude at the moment sells for $65.43 per barrel. It has an upward margin of 0.21%. Brent crude futures sells for $67.21 per barrel, is also in green, 0.25%. Bonny Light sells for $78.62. It's down 2.84%. It's been down in recent times for Bonny Light. But for the OPEC basket, dealers offer $65.10, and that market is staying flat, 0.00%. Well, let's get to our first conversation this afternoon. Now, the governor of Abia State, amongst others, Mr. Alex Otti, says he supports President Bola Tinubu's economic reforms. Governor Otti spoke over the weekend while receiving Senator Uji Uzo Kalu, representing Abia North, and Mr. Chris Adige, former lawmaker, at his residence in Isala, Ngwa South area of the state. Since May 2023, when President Tinubu assumed office, he has focused on liberalizing Nigeria's economy. He ended the petrol subsidy regime and floated the naira for exchange rate unification. The president also announced the Nigeria First policy, which aims to prioritize local goods and services. But despite all of these policies, there's been some fallout, and some Nigerians have continued to groan with regards to the high cost of living, high inflation rates, and reduced purchasing power.
And if you remember from all the manifestos from all the presidential candidates at the time in 2023, we did see that almost everybody was talking about close to the same set of policies that they were going to make. So they were going to end, the fuel subsidy regime. They were going to, liberalize the foreign exchange markets. We're going to reinstill, investor confidence in Nigeria's economy, and, streamline monetary policy so that it's more, effective with in terms of inflation targeting, right? So I'll say that these are things that we did expect to happen. How fast, was what no one could really determine. But seeing the pace at which things have gone, I'd say we've seen green lights from the investor committee. Well, not necessarily committee, investor community. That's what I was trying to say. We've seen green lights from them, and what that just tells us is that the policies that we are making are, making headway, right? Can things obviously get better? Of course, yes. Should they have been, approached in a better way? The answer is also yes. But the truth is, we are here now, and it's just the situation we're facing today is a situation where we just have to make do with what we have and make the best of what we have.
So the micro part of it is where I want us maybe to stay with at this time, because many say some of these policies affect more of the macro. That's where, investors talk about coming in and all of this. But the micro aspect of it, like you said, maybe could have been instituted better. Maybe some things would have been done better and on all of that. How do we now start addressing that holistically now, because it is something staring us in the eyes? What do you think? Are there any quick wins for that segment of Nigeria's economy moving forward? And what about those that have been instituted already? We have the student loan scheme, we have the credit consumer scheme, we have a lot of schemes also being introduced by this administration.
Yeah, I hear you very well on that. I think in terms of the micro aspect, the important thing is ensuring that these policies, first of all, those that have been, brutally hit by it, which are the most vulnerable in Nigeria society today, there is room, or there are social safety nets to, help them live through these tough times. I think that's something that we still haven't heard so much about, and we're not also hearing so much about progress, if there's any progress being made in that regard. I think that's something that would really help in terms of the micro impact, where people that are hardly hit by this can easily say, or can confidently say, oh, prices are higher, but we've been receiving XYZ amount of money from the federal government to support our household, right? Even with IMF or the World Bank that have supported, that confidently come out to support what Nigeria is doing in terms of the reforms that we've undertaken. The other aspect of it is ensuring that there are social safety nets available for people that will be the hardest hit when reforms like this take place. It is pretty much best practice, right? When reforms are undertaking, the people that will be largely affected by it are somewhat cushioned, with the impact of it. So I would say that's something that we still need to see a lot more, happening for. I think the other aspect of it is more communication from the government to the people. There is still that huge trust deficit. There's still that huge communication gap, and that snowballs into a knowledge gap where people do not really understand the policies that the federal government is undertaking on their behalf, and why these policies are being taken, and what these policies really mean for them, right? So it's extremely important that the communication side from the federal government becomes more tight-knit, and we're not just speaking, in economic terms where the person selling pepper on the road doesn't understand, but we're speaking in the languages that they do understand, they resonate with, and they can relate with. I think that's one other aspect that will really help to ensure that the micro impact of, the policies that have been undertaking, people do understand what they mean and are able to look forward to the potential benefits that these policies are supposed to provide eventually. I think the final thing, apart from sensitizing people and creating that awareness, is pointing them to the impact of these things that are already happening. A very good example is the transition from, or the movement from the removal of the petrol subsidy, as a matter of fact, from the Petroleum Industrial Act to the removal of fuel subsidy, to Dangote, to Dangote refinery, running, to the market competition we're beginning to see within the NNPCL and, Dangote refinery and other independent independent oil marketers, right? That complex interplay that we're seeing, that is somewhat, becoming where people can understand to see, oh, prices are down today, prices are up tomorrow. That's price flexibility or cost reflectiveness in pricing that people can really attest to. Explaining that dynamics then will come a very long way. So yes, I think those are the two things that I think in terms of micro impact, the government still has a lot more work to do, ensuring that people, number one, again, understand what they are doing by communicating effectively, and ensuring that the communication lines are as consistent as possible. And number two, ensuring that the social safety nets are very much available to people, and people actually receive them, and there's transparency, in how these monies are being disbursed. And the final thing is, effective monitoring and implementation. These policies are happening, ensuring that they're effectively monitored, they are effectively implemented, so that by the time people are expecting these benefits to materialize, they are not, stories are not being told. They are clear on, this is how we spend the money, this is what we did, and this is how it has benefited you.
Okay, now let me take a step further and stay with the Apex Bank. There's been lots of developments around that space. Backlog of about $7 billion, I guess, being cleared. We have our net reserves also looking pretty good from what was there in 2023. That is clear. I think about $3 to $4 billion was what we had. Now we are doing above $21 billion. That's a bit of stability. We must agree to that fact. Also, our reserves, basically external reserves too, are also doing pretty well at this time. But my question to you really would be, moving forward, what sort of moves do you expect from the monetary side that would obviously help complement what's happening in the fiscal side? Talking about easing of monetary policy, number one, and of course, maybe intervening in some other sectors gradually across the economy. The CBN says they just want inflation, they want to target inflation, focus on stability and all of it. Take it from me, you know where I'm headed already.
Yeah, I definitely know where you're headed. And I think it's extremely important, right, for us to always remember the core function, right, of the Apex Bank, right? They're not here to provide grants to businesses. They're not there to do that, right? Their job is to ensure price stability, and price stability across two functions: inflation, which trickles down to commodity prices, and the exchange rate, right? So they have decided to focus on their core function, because we're coming from a world where that was not the case. And that, of course, created loopholes in how monetary policy was being created and implemented, right? So it's more of, we're doing house cleaning, and we're just going to focus on what is truly our job to do, right? Because once the central bank is focused on what it should do, it cascades down, right? And it obviously supports what the fiscal policy side should be doing and what they are doing, right? So I would say that on the monetary policy side of things, what they are doing is sufficient. And I think one other thing to really mention here is that beyond price stability, right, the moves that the central bank is taking and how they're making sure they are instituting forward guidance by consistently communicating the policies that they're taking up, the policies that they're making, the changes that they're making, how they are making it, how they're even thinking about it, right, is doing a lot to instill investor confidence and support business confidence. I know where we're headed, where the conversation really is going is around the interest rate environment, how that it is still high and it is, somewhat negatively impacting output growth, because businesses cannot necessarily expand as much because they need the credit that they need is still very expensive. What I would say to that is it is a byproduct of our decision to take up reforms, right? It's unfortunate, yes, but it's a spillover, right, of making sure that our monetary policy is doing what it's supposed to do. Inflation is still very much high, regardless of what the numbers are saying. And the reason why I say regardless of what the numbers are saying is because anecdotally, right, we are seeing that there has been some, cosmetic thing going on with the not cosmetic thing now, a cosmetic change basically with the inflation numbers. We've rebased our inflation numbers from how many years ago, over 10 years ago, right? And so our inflation numbers are not necessarily right now reflecting the increase in cost of inputs, the increase in commodities and all that. Although we're beginning to see that happen on a month-on-month basis, but the annual inflation numbers are not yet showing that, and the central bank knows this. And so any decision from them to say they want to cut interest rates too quickly, coinciding that with what is happening globally, and then you coincide that with what is also happening, domestically, it will be too sharp, and investors will be wary of that kind of decision. So they have to continually play the cautious card and do what needs to be done in terms of encouraging, investors to come in. Right now, we're still attracting more of FPIs. We need FDIs to come in, and for that to happen, they need to know that the policy environment is stable and would favor them, right? So I would say that what the CBN is currently doing is enough to complement what fiscal policy should be doing. If anything, I feel like I think the conversation should be a lot more on what more can the federal government do, right, to ensure that they are supporting what monetary policy is already doing.
That handshake, because it's very important that we have that handshake for us to do better. But in recent times, we've seen a bit of stability regards our currency between 1,500, 1,600 in some cases. And many say that's good for predictability of investors. You can decide, make some decisions. But I'm still wondering if it's appropriately priced.
Your concerns are very valid. I do understand where they're coming from when you consider that we were, trading in a world where the naira was trading at 800 naira to $1, at some point 100 and something naira to $1, right? So looking at that very far margin to about 1,500, it's still quite concerning for business owners and for people like and for the general public, really. But I would say that, again, we're coming from almost 8 years of an overvalued currency, right? And what that just simply is the naira was not fairly priced. People were buying the naira at a more expensive rate than what the CBN was actually saying the naira's true value was, right? So the gap between the official rate and the parallel market rate at the time was around 60%, almost 70%, right? What that tells you is that the naira was highly overvalued. And now we've gotten to a point where we had to create that correction. The market had to correct itself. And so businesses were already spending a blended rate that was higher than what the CBN was selling the naira at. And they could not get all of their naira at the FX rate at the time, which was around about 400, 500, entering into 600 thereabout. So what we are facing, right, is not necessarily the naira being devalued out of nowhere. It was more of taking the naira to where it already was. I don't know if you understand what I'm saying.
I get your point.
Businesses were already spending that much, right? So what the central bank has done is allowed the market to be free to correct itself. So the naira right now is trading at what it should have been trading at some 5 years ago, some 6 years ago, right? So the expectation now is that market correction continues to happen, that the more there's FX supply in the market, because remember, the exchange in itself is a price, right? It's the price of the currency, price at which the currency is being traded. So if there's more supply of the currency that is constantly meeting demand, we should see that price come down over time, right? But then again, remember, we have taken up reforms. We're in a period of stability. Stability is better than volatility, right? And businesses will take that over the naira being wobbly. So if they can get stability, that's good enough to make projections. That's good enough to, still make certain amount of investments. And the expectation is that over time, the naira should appreciate because of these corrective measures that we expect the markets to keep taking.
Finally, before I let you go, we're not going to round up this conversation without looking at the global issues and how it affects us. Trump is still there, and there are talks between him and, of course, China, and we can see the impact already across the board. What are you learning around that?
I mean, what we're learning is that, of course, Nigeria is still susceptible to some of these shocks, but our ability to withstand them is getting stronger, especially when you look at the fact that other markets, other African markets were really hit by the trade tensions, the tariff slaps. We didn't see the naira oscillate too much or depreciate too much. So that tells us that our buffers are beginning to get more resilient. They are growing. And investors are not pricing as much of a high premium as they would on Nigeria some 3, 4, 5, 6 years ago, right? So that's a good signal. I think the other thing for us to consider is the importation cost for Nigeria, which is kind of split. So when you look at commodities like crude oil, with oil prices being volatile, but primarily showing a downward trend. What that tells us is that there's some, question marks on how the government will consistently generate revenue to meet its budget needs. And that will definitely remain a very big concern, especially for credit rating agencies as we go further into the year. The other aspect is commodities that we significantly import, like wheat, right? If the price of those commodities continue to increase, we would likely see Nigeria's import bill decrease, but we will continue to see that dance. Like you had, given an assessment earlier before we started having a conversation, we're seeing like mixed price trends, right, across global commodities. And so Nigeria's import or trade movements will dance to that tune to an extent. But I guess the more important thing is this uncertainty and volatility that we're seeing in the global space. What that tells us is that this uncertainty is actually going to continue. Trump is not going to be out of power, right now. He still has his full term to continue for. And what that tells us is that this uncertainty might likely be the case for the coming years. And so how is Nigeria thinking about, being more resilient even in these times? How can we continue to increase our share of global trade? Because with everything that we're seeing, there is a market that is untapped. And by market, I mean there's market demand, right? The Asian markets, the European markets, they will be looking for more suppliers to meet their demand for certain commodities. What strategic commodities are the Nigerian government looking at? And where can they place their priorities to ensure that Nigeria is producing enough of those commodities to increase its output and increase its, share of global trade? So I would say while these dynamics are happening and they seem somewhat negative towards Nigeria, I think there is a bright light. There is a bright light for Nigeria, and there's an opportunity to take advantage of, a more global market share by focusing on commodities we do have some comparative advantage in.
I think that's where the Nigeria First policy is coming in. Do you see that sorting anything out as we wrap up?
I mean, it will definitely have some impact. There is that drive to ensure that people, support what is made locally and ensuring that the government also provides support for production locally. But then again, there has to be that emphasis on applying technology and, more importantly, the commodities that we are prioritizing. We cannot be prioritizing commodities that the global market doesn't necessarily need or will not provide us, the kind of revenue that we're looking for. So we have to be very, very strategic. And I think a very good example will be precious metals, right? We are seeing huge demand for copper, for zinc, for lithium. Nigeria does have, strong reserves in those commodities. What are we doing to, exploit those commodities? And remember, it's not just about getting the raw materials. How are we thinking about value addition? How are we attracting the private sector into these particular sectors? How are we even supporting, small scale businesses that are already playing in this sector? So I would say that was just an example, but there are many other sectors, many other commodities that Nigeria can actually do a lot more in. So Nigeria First policy is a good one, but then again, implementation and having the right kind of mindset to actually implement it is extremely important. And I think commodity focus is going to be one way for us to move forward there.
Tumebe Oluwole, senior economist, STERS, thank you so very much for your time on the program. We really do appreciate this.
Thank you. Thank you for having me.
All right, there's still to come on the show. We'll stay with Midterm Review, look at MSME's development in Nigeria under President Bola Tinubu's administration.